Okay, so we kind of skipped around, just went over some of it. If you watch the video for the class, then you know I'm probably just going to give a quiz for this chapter instead of having it on a test. Just because it's a lot of information. It's not really, it's important information, but it's more of, you know, I don't have them. Did I not give you my class? There you go.
Because I wasn't here Monday. Yeah. And I didn't get one after the test. So.
Okay.
So I tried to stop by Monday to ask, but you were busy every time I tried to stop by. So.
All right, so while this thing's going on, this next part we're going to work on. So we've been talking about internal controls. Which are just measures that businesses can take to keep their assets safe and to make sure they're accurately reporting financial information. And we talked about how the bank statement is a good, the bank statement is a good internal control because everything that's on it is coming from an independent party, so it's pretty reliable, and you're not worried about somebody manipulating it and changing it. All right, does anybody else need a reading guide? All right, so we filled out a lot of this reading guide. It'll be, you got a completed copy of it out on the modules if you missed some of the answers. Okay. So I'm going to look at starting at the bottom. I don't even know what page that is because my pages aren't numbered. It's the next to the last page. Yeah, that's not where I want to be. All right, so starting here with Roman numeral 5 for a bank reconciliation. All right. Anybody ever done one before, a bank rec? Checking the bank against your check register or your checking account to make sure everything's the same. Y'all just look at it every once in a while. Y'all look at it a lot? Okay. All right. Well, I mean, most of us don't write many checks anyway. And most of everything, especially with y'all, it's probably just mostly debits and stuff and ATM withdrawals and stuff like that. So you kind of, everything you do is pretty much immediate. So there's not really necessarily a need for a reconciliation because your balance and the bank balance is pretty much going to agree because everything you do is electronic, it's immediate. So they should match. But with a business that writes checks, there's going to be some timing differences. They may mail checks the last day of the month. They're not going to clear to the next month on the next month's bank statement. Y'all ever look at your bank statements? Yeah. Anybody else? Yeah. You've seen one before? No? Yeah. Okay. It's just kind of like getting to be a thing of the past. But with a business, you're going to have to look at it a little bit. Okay. So a bank reconciliation is analysis of the items and amounts that result in a change in the cash balance on the bank statement, or it being different from books, rather. So your book balance and your bank balance are rarely going to be the same. With like a business that mails checks and has things that have timing differences, payroll checks, like if somebody doesn't get direct deposit, then maybe their check doesn't clear, before the statement's cut. Again, like with y'all, you may not have a difference because you're doing everything electronically. All right, so there's two sections of a bank reconciliation. You're going to have the bank section and you're going to have the company section. So the bank section, it begins with the cash balance according to the bank statement. So that's going to be like your ending balance, which I'll show y'all that in a minute. And it ends with the adjusted balance. So I said reconcile, but that's the same thing. So we start with the balance in the bank statement. We add or subtract any differences, and we come out with an adjusted balance. Company balance, a company section rather. Your balance, you're going to start out with your company book balance, like your ledger balance. And then you're going to end with an adjusted balance. And they should equal. They should be the same when you're all done. I know this is kind of weird, but we're going to do that problem so this makes more sense. All right, so what we'll do on the bank section, we will enter the balance from the statement, enter the cash balance according to the bank from the ending. Some of these things don't make sense. Ending cash balance according to the bank statement. So when you look at the bank statement, you're trying to decide what amount to use. You're going to use the amount that the bank shows at the end of the month. All right, so then you'd add any deposits that the bank hasn't gotten yet. Like, I mean, it could be that it doesn't really happen that much anymore. But let's say you got payments in the mail from customers on the last day of the month. And so you reported them on the books. So your ledger is going to show those deposits in there. But maybe you take them to the bank and put them in the night drop, so you went after hours and dropped it in their after hours drawer. And so they're not going to have it posted to the next day. So you're going to have some deposits that are on your books that they don't have yet. They'll have them the next day, but if a month rolls over or a statement is cut, then they won't show up. All right, so those are called deposits in transit. That means they're on the way, essentially. It's just a timing difference. And then you'll deduct any outstanding checks. So what that means is you've written checks, you've given them to vendors or mailed them out or whatever, and they just haven't cleared your bank account yet. That's what outstanding checks are. So then we'll determine the adjusted balance by adding any deposits in transit to the bank balance and subtracting any outstanding checks. All right. For the company section, you're going to enter the cash balance according to the company from the ending cash balance in the ledger. So what you'll do is you have all your transactions posted for the month in your ledger. That same place you go and get the balances for your trial balance, you'll take that balance off of there for the last day of the month, and that's the balance you're going to start with. All right, this is what is kind of weird. You'll add credit memos and deduct debit memos. All right, so how many of y'all have ever looked at a bank statement? Well, you probably have. You looked at a bank statement since you've been in here? And did you just look backwards to you, like the credits and the debits? Okay. That's because to the bank, your bank account is a liability. So they're doing everything the opposite way. So when they credit your account, that's increasing their liability, but it's giving you money. So your perspective is flipped from theirs. So that threw me off the first time I looked at one after I'd been in accounting a while. I was like, I don't understand the issue. But yeah, it's backwards. It's completely backwards. All right, so deducting debit memos that have not been recorded in the books. So that's going to be debit memos from the bank is going to be bank fees. You know, somebody bounced a check, something that's coming out of your account. And again, it's backwards, so y'all don't let that throw y'all off. In accounting, we debit cash to increase it. The bank debits your accounts to decrease it because they're looking at you from the opposite perspective. Just don't get too hung up on that. All right, so we'll compare those deductions to what we have in our journal and make sure that everything's recorded. And then we'll determine our adjusted balance by combining all these numbers together. And then make sure that our balances are equal on our bank part and our company part of reconciliation. All right, if they're not, we got to figure out why. And then we may have to make some journal entries to fix our books to match the bank. Okay, so that's kind of why I wanted to do this problem so that it would make a little more sense. So that problem, oops, that's not what I want to do. All right, so I want to look at this problem real quick. If I got one. You need one? You need a pencil? There's a whole bunch of them up here. Come and get one. All right, so the version of it they had in the book did not look real to me. So I went back, and you're going to find that every bank that you deal with, their bank statement is going to look different from others. And some of them are real easy to use, and some of them make no sense at all. I'm trying to think of, maybe it was Community or something. And they may have changed. It's been years since I've looked at one, but it's kind of like everything's all mixed together. If I know that Trustmark has your deposits listed. Then they'll have a section with your checks that have cleared. Then they'll have a section with drafts. So it's all kind of categorized. When you have a bank statement, it's usually at smaller banks, you know, like local banks. It's just all jumbled up in and out of there, and it's just a nightmare. It's hard to find anything. Okay, so this company is called Sunshine Interiors. They deposit their daily cash receipts in a night depository. I guess people still do that. I'm sure they do. Because you have stores that close after the bank is closed, and they go, y'all ever heard of a night? Y'all ever been going to like the ATM and seen the little thing that says night depository and wondered what it was? Looks like has a handle on it. Businesses that have a business bank account with a bank, they go, you open it up, you drop your bank bag in there with your deposits, and it's locked up. And the next morning, the bank tellers or whatever will grab it and like record your deposits and stuff. But it's a way for you to get the money in the bank out of your possession. It's it's secure for the most part, and that way you'll get credit for the deposit the next day. So in this company, they do this every night. They put their deposits in the night depository after hours. So the information needed to reconcile the bank statement is below. So we're going to do July 31, 2018. And when you're doing a bank reconciliation, you need the one from the month before. Because what you've got to do is, this is the month before. So it shows everything that had not cleared. You had one deposit. They put it in their books on June 30, but since they take this stuff to the bank after hours, it's not going to be on their bank statement yet. So you've got this deposit in transit is what it's called. Then these are the list of the checks that had not cleared yet. So we've got to look and see if these things cleared this month's statement, because it should just be a timing difference. And this is how you find, like, okay, my check that I wrote to the pest control company hasn't cleared, and I wrote it 2 months ago. You know, so you call them and say, hey, why haven't you cashed my check? We never got it. You know, that whole process. So that's how you clean things up and make sure that you don't have checks hanging out there that aren't clearing. So this is going to be something we're going to refer back to. All right. This is your list of deposits and your list of checks written out of the books. Okay, so I don't have a ledger here. We just have a list of the transactions. And here's our balance at the beginning of the month in our ledger. And do we have an ending balance? Okay, I guess we would have to figure that out. All right, so here's your bank statement. This is on page 3. All right, I made this because the one that was in the problem was, I don't know, it didn't look like anyone I had ever seen, and it was very confusing. So I was trying to make this, I kind of mimic Trustmark's bank statement set up because it's a good organization of one. So you'll see at the top, this is the statement period. This is the time period that it covers. Most of the time, I would say it covers a month. You will find banks that cut off, it depends on when you opened your account. Like my parents' Bank Plus accounts cut off on the 10th. Or maybe that's just how they do personal accounts. I don't know, but it's kind of weird. It's a weird cutoff time because you've got this layover between months. But this one is a month. It cuts off on the 31st. We see our balance on our last statement. That would be our beginning bank balance. Deposits that went into the bank, checks that went through the bank, service charges they're charging us, balance this statement. Well, this is telling us what the bank's balance is as of July 31st. So that's the one you're going to want to start with. You're not going to want to start with the beginning of the month. We're trying to make the two match and put any differences in a list to make sure we've got everything recorded. All right, so here's all your deposits listed. So these are the ones that went through the bank. So what we're going to do is compare this to our books. And then here's the checks that went through the bank. Now, one thing you'll notice is there's stars by some of them. And when you're looking at a real bank statement, you'll see a lot of times there'll be some kind of symbol or something. And that means there's numbers skipped. Well, that happens a lot, especially when you have a few hanging over from last month that didn't clear, and it's one here, one there, and they're not going to be in order. And then when you start getting towards the end of the month, you're going to have some that have cleared, some that haven't made it through yet. So it's just telling you, pay attention to this. There's a number in there you need to pick up. Okay. Other withdrawals is stuff like drafts, service charges. They had somebody bounce a check. So that's what NSF means. Not sufficient funds. I say insufficient funds, but insufficient. I guess not sufficient funds makes sense too, but it's a bad check. Somebody bounced a check. Essentially is what happened there. All right, so here is your form that we're going to use. All right, so at the top of it, we'll just put their name. A lot of times you'll see, well, actually, I've never seen it not be that way. On the back side of the last page or the first page of your bank statement, you'll see if they've got a printed format on there. You can use that just as easy. And then you don't have to go through all this. All right, so July 31st is the date that we are preparing this as of. Okay, so the first thing that we'll put on here is our cash balance. Okay, they write according to bank statement. I always put cash balance per bank. You know what per means? According to. It's a lot shorter, so I'm going to say, I'll just put according to, but y'all can put cash per bank. According to bank statement. I mean, generally, if you're doing one of these, you're pretty much doing it for yourself. There doesn't have to be any standard wording as long as you're indicating this is the bank's balance. All right, so what would be the balance according to the bank? Which one did I tell y'all to use?
Last
Yeah, so how much is that?
$11,601.41.
Okay, so that's the balance that the bank is telling us they have on record on July 31st. All right, now, let's go back. Let's go back to our statement. All right, so here's all our deposits that went through the bank. So we've got to kind of look at that and see what went through the bank that we have already recorded on the books. Okay, so these are our deposits on the books. Okay, so the first one that the bank has listed is 780.80. So do you see 780.80? Okay, so that means we probably had one from last month that had not cleared yet. So what I do is I mark that one. Okay, this deposit from June 30 that had not cleared on June's bank statement has now cleared. So I'm gonna mark that. And then I'm gonna go onto my bank statement. I'm gonna mark that, just showing I've done it. This is my method. Some people use highlighters, some people cross through stuff. If you ever have to do this, you'll figure out your own way that works. All right, the next one, 569.50. Is that on our list? This could take a while. All right, so mark that off on your statement and mark it off on your list. All right, so what about the next one? We got 701.80. Yeah. 819.24. 580.70. There's one on the statement that we don't have. So we'll have to, I'm going to just make a note out here for myself. What I would do is, in reality, is I would highlight that on the bank statement that's telling me to go back and do something with it. So I'm just going to write myself a note here. What date was that? 7/14. All right. So what's the next one? 610, 701.26, 731.45, 601.50. Okay, so I've got one here on my records that did not appear on the bank statement. So this will be a deposit for my end of day, July 31st, and because I put it in that night depository, it's not going to clear until August. So I'm just going to put a note here, deposit in transit.
For the deposit on the 23rd, you say 713. You supposed to be 731.
Oh, is it backwards?
Yeah.
Okay, so that's an error. All right, so it cleared for 731. We have 713. So I'm gonna make a note out here. Cleared for 731.45. So we made a mistake according to the books. We flip-flopped it. Okay, good catch. Y'all see anything else that's weird? Does everything else look like it matches up? Okay, so the next thing we'll do is go through the list of checks that cleared and do the same thing. So what I would do first, starting with the bank statement, I would go back to this old bank reconciliation from the prior month to see if any of this stuff is cleared. So 580 cleared, 602 cleared, 612 cleared, but 613 did not. So I'm going to mark that, and I'm just going to put myself a note, did not clear in July. So that's something else we gotta deal with. Everything I'm circling, starring, making notes by, these are things we gotta deal with some kind of way. All right, so let's go to our list from the books and see what's clear. All right, 612, was that from last month? Yes, okay. So 614 for 243.50. 615 for 350.10. 616, 279.90. 17, 395.50. 18, 19, 20, 21. Okay, so you see on your statement you got a star by 24. And if you look above it, the last one that cleared before it was 21. So you've got to skip 22 and 23 are missing. But on our list, we see that they're voided. So that explains that gap. So then we have 624, 25, 26, 27, and again, we're going to have a gap. So between 627 and 629, there's a gap. So we know this one did not clear. All right, 29, 30, 31, 32. You got a gap again. That one clear, but that one did not. So we know the two that we circled will be outstanding checks from July. Is this making sense? Okay. So let's go back to our bank reconciliation form. Okay, so cash balance according to bank statement. We got that written down. So the next thing we're going to have to do is add any deposits that have not cleared. So add deposit July 31, not recorded by bank. How much was that? How much was that deposit that they don't have? No. The one that we have, but the bank doesn't have.
Or from the June 30th.
The bank has that one. We're doing the bank's part. We're trying to see what is the bank missing. They're missing this deposit. So the first part we're doing is bank and what they're missing. Then we'll do books and what we're missing. Okay, so that deposit is missing from the bank statement. And then we'll deduct any outstanding checks. All right, so I know we had one from June that didn't clear. So I'll put 613. That was $137.50. You know, 1 month is fine. After it didn't clear the second month, I'd probably be calling these people going, what's the deal? Why are you not cashing my check? All right, so from our list, the ones we circled, we've got 628 and 633 that didn't appear on the bank statement. We got to add those or subtract them from the bank's balance because that didn't clear the bank. So we got to show that those checks are going to come through. They are going to clear. I mean, if we froze operations right now and just let everything clear and settle out, these are eventually going to come out. So you've got 837.70 and you've got check number 633 that was 310.08. So what would be the total of those checks? All right, I'm going to save y'all the trouble of adding this crap up. 1285.28. Okay, we're going to subtract this. The fact that the word deduct is up there tells you that. if it is clear to you to put a plus and a minus, that may work better for you. I like the visuals. I like to see the plus and the minus, let's just say. So what you'll do is you'll take the bank's balance on the statement. You're going to add any deposits that have not shown up on the bank statement. You're going to take out any checks that have not gone through the bank yet. And the difference will be the adjusted balance for the bank. What y'all get? Anything? Yep. $11,494 is what we should be getting. Y'all get that? All right. Now the next part is you need me to leave that. Got it. Next part's going to be cash balance according to company records. I always say cash balance per books. You know, they get so formal on this wording and it's hard to remember. What's really cool about this is probably you'll be using a computer, and most computers, software systems rather, have that capability for you to reconcile in the software, so it makes it a lot easier. But what's helpful is, like, you'll see those stars on there where you have gaps. Like, you know, a lot of people use QuickBooks. So when I'm reconciling QuickBooks, you can just go click, drag that thing down, all the numbers that you know cleared, and then when you get to that gap, you know to quit. Only problem is if you have recorded something backwards, you're going to have to go back and find it if things don't work out on these. So, but it does help you get through it quicker. You just hold your mouse and drag it down. All right, so cash balance according to the company's records. Well, we got a beginning balance, and we've got the deposits and the checks, but they don't give us an ending balance. So we'll start with our July 1 balance. We'll add our deposits of $64.65, $42, and we'll subtract our checks, $83.79, $42, and that will give us our ending balance. We'll move this over. All right, so what's my July 31st balance? Okay, so that's my book balance as of July 31st. Y'all following? You're awake? All right, so we'll start our book part off with $76.64. That's our balance on July 31st in our ledger. So theoretically, we could look in the ledger and see what our balance is. We wouldn't have to calculate it, but this is just an exercise. All right, so we need to add anything that cleared the bank, that increased our cash balance, that we don't have recorded in our books yet. So we know we have that one deposit. And according to the problem, if it tells you this anywhere or not, it tells you it's from Smith Homes, but I don't think there's anywhere else that this tells you that's a note receivable from a customer. So you're not necessarily going to know this is a note receivable from the way this problem is worded. But this is where the customer paid EFT, electronic funds transfer. They just paid directly through the bank. So we'll say note receivable and interest collected by bank. And that was $41.60, right? All right, so now what else do we have? I know there was a mistake on a check, maybe. All right, let's see. No. It was a deposit. Okay, so we had recorded it for $713.45. The bank has it at $731.45, so we should have more money. We recorded it for too little. So what's that difference? It's $18. So we have $18 to add back for this deposit we recorded. Too little, too small. So we need to fix that. Usually you'll get something, well, if you wrote the numbers down right on the deposit slip, then you're not. You'll find it when you do the bank reconciliation. If you add wrong and you have the wrong total on it, they'll send you a note or something saying here's a deposit correction. All right, so we have error recording July 23rd deposit. So we're going to add $18. These are the good kind of mistakes. You don't like the ones where you have to take money out. All right, so supposedly there's another error, so let's look. Did y'all see any errors when we're marking these checks off? Those of you who were actually looking. Yeah, I see one. All right, so look at check number 627. We've got it recorded for $381.73, but it cleared for $318.73. These kind of mistakes are hard to see because the numbers, you got the correct numbers there, they're just in the wrong order. And if you don't look really close, if you're just scanning, your brain may not pick up on the fact that it's backwards. So we wrote it for too much in the books. That means we get to add some money back. So the difference is $63. We have too much in our ledger. We're going to add back 63. Okay, so kind of write this the same way. Error recording. Check 627. We're going to get to add back $63. Okay, so that's it for our additions that we're going to make. So we'll just get a total of those. This is the total of those 3 transactions. All right. So the next thing is to deduct anything that went through the bank that we don't have recorded on the journals, the ledgers. So we'll deduct, if y'all will look at on your bank statement at the very bottom, it says other withdrawals. It's on page 3 of 3. You got an NSF, that's that bad check, and then you got SC, which means service charge. That's the charge they charge you for letting you use their bank and running your stuff through there. All right, so this says check return because of insufficient funds. I would be writing NSF check. I mean, that was just a little wordy. That was $375. I don't know why they have all this stuff running right on top of each other, but this is how they show it on the answer. Then you've got bank service charges. You could just write service charges if you wanted to. Obviously, it's bank charges or we wouldn't be we're dealing with a bank account. All right, that's 36. The total of these two is 411. So I would probably do this just so I know which one I add, which one I subtract. So if you add 766, 7664, 4241, and subtract 411, you're going to get 11,494. That is your adjusted balance for your books. So now you've got an adjusted balance for your bank, an adjusted balance for your books, and they're the same amount. That's the goal. So they match. Does it always work like that? No. The more you have going through an account, the more likely it is that you're going to have boo-boos. And trying to find them sometimes is like looking for a needle in a haystack. So that's not fun. Okay. So really, that's all I want to do for that chapter. You're going to need to just be familiar with what increases a bank account, what decreases it, and things like that for a bank rate. But I'm just going to do a quiz. It's going to be online with Cengage because I want you to be familiar with it, but I just don't want to spend a whole lot of time on it. It's more important that you're familiar with like the internal controls, like how to keep your assets safe and things like that. So I've got the completed reading guide out there in your modules for you. It'd probably be a good idea to print it and at least look at it before you take the quiz because it'll be timed. And I don't know that I'm going to give you 3 attempts on it because it's kind of a substitute for a test. So I'm just not going to include that on the test. The material is very different from what we're doing next, and I just didn't feel like it was. I didn't really feel like it was worth dedicating that space in the test to that. It's important that. All right, so the next chapter. Ooh, sorry. Oh, you got it? Sorry about that. Obviously, I never placed books. The next chapter we're going to do is 10, and we're going to be learning about depreciation. And it's kind of a bad spot because you're going to be off for a week for Thanksgiving. So we'll have one more week of class, which I got to figure out how we're going to do that. May just be videos you watch. I don't know. I may live stream. You can watch if you want to. You can watch the replay if you want to. If it was me and I was at home, I'd probably be asleep. I know how that is. I don't know. At 9, I'd probably be up by then because there's too much going on in my house. Somebody would have gotten me up by then. Cats jumping on my head. You know, I don't get to sleep late. Once the sun comes up, so do I. So, anyway, I'll think about all that and have that all kind of planned out. But we'll spend Friday getting started on this. We'll spend next week on it, and then you'll be off for a week. And we'll have another week. But I'll have it all planned out. So y'all don't worry about that. But get some of this reading done. Do you have your part 1 to turn in? So if you got that, turn it in before you leave so I can get that reviewed and get your next part to you. So the thing is, once I have it graded and ready for you to pick up, are y'all all going to be on campus Friday? Everybody? Yeah. Whenever. Well, I'll put in the announcements when it's ready for you. Y'all come by and get it. Because the reason you just have a limited amount of time to get this thing finished. You can do it. You can do the whole problem in a couple of hours. I mean, it's not that lengthy, but I don't want you being stretched too thin with everything else you've got going on. So I'd rather you have it over the weekend, but I'm going to need you to turn it. Actually, I really could give you the whole rest of the problem and kind of let you roll. And I may do that. Because what you can do is if you're concerned that something's not right, let me look at it. And I'll look at it before you move forward. If you're uncomfortable with it and you don't want to move on until I look at it, fine. But once I know that you've got your journal entries right and you're posting them, the next thing is going to be to do your, the third part, to do your adjusting journal entries. So you may want to get me to just look over them before you move to the last part. But anyway, I'll have it all ready for you so you can pick it all up. Because it's got to be turned in Friday before you go. On paper, physically. So, all right, y'all have a good one.
Not really, honestly. Yeah, at the house.